Good morning, traders, and welcome to another session where I will be, going through the evaluation. Me as the CEO and founder of Perdeck Capital, a proprietary trading firm specialized in futures, I will be trading our own evaluation, move into the Simfonet account, and then, finally live. And we'll show you the entire process, how I approach it, how you should approach it when you're in the beginning, and making everything as simple and clear as possible so that I can walk you through how trading at our firm, what it looks like, right? We'll actually go through all growth stages, right? Because with our proprietary trading firm, you are like, the live account is not the final thing to get. And as you know, first of all, with us, you're guaranteed to be moved into a live account. And then as you show good process, we will provide additional funds and so that you can grow and make more money with us. So let's look at it. Let's look at the market right now. First, let's look at the daily to get a better idea of where we're at. That is what I do every day to start at the daily. Higher time frames, we're approaching 22,000, pretty important key level. Now let's look at the 4 hourly, all good. Then 1 hourly to identify the trend, because I prefer to trade with the trend rather than against the trend, but it all depends, right? If there's a good setup, then I'll also take a counter trend trade. This all depends on, basically, if I see a setup or not, right? And also how I have, what the risk is that I have available on that day. So on the 1 hourly, we can clearly see that we're in an uptrend. We've been grinding around here, now got a pretty nice breakout out of 900, which would have been a really nice trade, but I will first go through the different time frames here with you. Now let's look at the 15-minute if there's anything interesting to see. No, not really. And then finally, we will go into the 5-minute, which is the time frame that I watch, where I manage my trade to get a better idea of where price is heading on the higher time frame. All right. So looking at what we have right here and looking at the news were quite positive. We had unemployment rate an hour ago, and like 0.1% lower than expected. So that is quite positive. Does not always have that big of an impact on the market, but as you can see, this is the wick, this is the candle of that news, like all the way from 800 to 900s here, this 5-minute candle. And I mean, that's, looking at this candle, that's the exact reason why I don't trade news, at least not this type of news event with NQ or ES. Obviously there's a lot of potential, but there's also just a lot of ways to get burned. A lot of ways to get burned. So pretty nice move here at the open, all the way from 70 to 930. That's a really nice 60-point move. Beautiful. Heading higher to the 50s. So now next thing that what we're gonna do is put some key levels on the chart, because I will be looking for breaks to the downside, breaks to the upside, just trading off of volume, looking at key levels, taking a really simple approach. And then as we go deeper and deeper and deeper into the series, I will show you how to add additional tools to get higher probability trades, right? So I'll be adding tools such as the footprint and so on. So let's look at it. Let's look at some levels right here. We have the obvious level 900. And I mean, there's just a beautiful strong candle to the upside right here. So I would be looking to take, to get an entry, either if we get a pullback into 900 with a break, then through 50 to the upside. But, I'm just going to wait for now, just see what happens. I mean, that is definitely a potential. That would be my first trade idea right here. A break of 50, 52. And let's see what price does here for now. How low we can go. I mean, we can see the high here of this candle, 20, around the 20s. So that's where I'm going to be putting another line, important level for me right here. And because of this strong move to the upside here, I'm willing to take the risk and put my, basically have an early entry. I'd be selling into the 80s, be putting my stop loss here at the 20s. But because this is a quite risky early entry, I will be really fast to trail my stop loss. It's a quite risky position as I said. So, but I want to see the break here. I can see an increase in volume, which is good. Break of 60 just happened, moving into 67. So, but as I said, I'm going to move my stop loss real quick because I don't want to get stopped out here, moving into 60. So risk to reward ratio wise, not the best trade right here, but just a quick scalp. I wasn't feeling too confident with this position. That is why I just wanted to take a quick scalp here from the 50s into the 60s. So as you can see here, just the 8-point move, nothing too fancy. But this was just a quick scalp. Now I'll wait for a potential re-entry to get the actual position. But let's see. So we could imagine a pullback into the 40s, and then with another break of the 50s, that's where I would re-enter. But I'll just wait for now. Not going to take any position right now. So, alternatively, what I could have done is move my stop to 40 to limit my risk to just around 12 points, and then hold onto this position to move higher. But as I said, this was a pretty early entry right here, and I wasn't feeling too confident. So with a break of 40, my trade idea would kind of be invalidated. So we got to move into 40. I would be looking for let's see how this, so I'll be putting my buy order right here with a break of 55, 54, 55. I would, take a second attempt of the break of the 50s. But let's just see. Not trying to take any early entry right here. Now I can limit, I have a quite at 37, I can put my stop loss. So that is a little bit more risk than I take on average, because I take my average stop is around 20 points. And as soon as we break 55, I will be moving my stop loss closer to my entry, right around here to 44, 45. But for now, just patiently wait. For price, whatever, to let price do whatever it wants to do. So now, potentially, if we would break 50 into 54, I could enter a second position. But I'm, not looking to take this risk. Because I don't like this movement too much at the moment. It's all about now patiently waiting. So I entered here because I thought, yeah, that was quite a good pullback and an increase in volume as we moved away from the 40s. And that is why I was pretty confident to re-enter my position right here, like my initial trade idea, which was the break of the 50s. But yeah, at the moment, kind of struggling. Buyers kind of struggling to push the price higher here. Might like wipe out the 40s, move lower into maybe even the 20s. But I'm just, as I said, gonna patiently wait right here. Not increasing contract size. Even with the potential break of 50, I wouldn't increase my contract size now, but also not moving my stop at the moment. I'll just stick to my initial trade idea. One thing I haven't done though, which I should do, is have a take profit. I'm definitely looking for a break of 70, kind of into 80. And I mean, that is where I could potentially add with the break of the high of day 68. But as I said, not feeling too confident. And I mean, we're up around 77.5, 77.50 on the day now. But still not feeling, as I said, not feeling too confident with this position at the moment. So I'm just going to let it run for now with my 5 micro contracts. And yeah, not going to do anything else here. So gonna move my stop to the 40s right now. I'm gonna slowly trail it with the break of 67, 70 around here. I would even go and move it closer to my entry, right around to the 50s. But not looking too good for me at the moment. Yeah, got stopped out. Not a big deal. And now I'm going to just wait. So, first time my trade idea worked out, as you can see. The break of 50. Was looking to take profit a little bit higher because I usually go for 20 points with the current environment. But yeah, took profit early here at the 60s, which was really good because we actually did not move higher. And then gonna pull back into 40s with we're able to hold above 40, and with the move into the 50s, took another attempt. So I'm definitely interested in taking another attempt, but for now I'm just gonna wait and see if we move lower into 20s or even lower. Like, what is the lower day actually? 790. Yeah. I mean, I will definitely already place my order right here, because as I said, I'm still confident, but it might take a while until we get there again. And then in the meantime, I will obviously watch what price is doing. And you know what I could do today, maybe I could average into the position and show you an example of how I do that. I think in one of the first sessions I also did that. And you know, because as we go through the series, I also want you to see, to show you how I would trade my personal account. So I'm not only going to show you the basics. So that's a pretty nice one right here. So yeah, I would add one already with the break of 44. I like the increase in volume on this right around the 30s right here. So I would actually add my first one with the break of 45, not 40, let's put it at 45. And then the second one with the break of 50 is maybe a little bit too close, but for now I'm going to keep the limit order there. And let's wait. We got another. So we got filled with this one position right here. Now I'm going to move my stop to 30. I'm going to keep the second one at 55. For now. And I would set the stop for the second position right here at 34. So a really nice increase in volume as we're pushing through 45, moving into 50 now. Definitely not that smooth and easy of a trade. Kind of choppy sideways, like slow grind to the downside movement here. I think like a break to the upside of 50 is, it can happen anytime, but we might get a pullback lower all the way through the 20s. But for now, I'm going to keep like my orders as I have them right here. Don't want to change anything. Yeah. Since the first attempt was was profitable, didn't get that many points, but generally the first one was profitable, I would go for a fourth attempt. Otherwise, I would have called it a day. Like let's say if we would have gotten stopped out with this one now, and the first one had already failed, then I would have stopped it for the day. That is what I usually do. When I have a trade idea and I get stopped out 3 times in a row, I usually call it a day because I don't want to get caught up in any choppiness and just stick around for hours for my setup to play out. You know, sometimes it might happen that it takes 2 hours for it to work out and then it can be quite profitable. But, you know, today I'm definitely not looking for anything like that. So we got our fill here right at 52. So I moved the stop of this position to 33, putting my take profit 1 to the 79, take profit 2 to 90, like or 80 and 90. But yeah, gonna change this as the position changes, obviously. So let's see. So I finally want to see the break here of 67, the one that I wanted to see here already. But let's see what happens. So there's definitely a more risky position right here. In terms of position size. I mean, I definitely like the setup and everything. But in terms of position size, definitely a higher risk than we have taken in the past days. But I like the setup, and that's why I'm willing to take the risk. But definitely going to move my first stop now here to the 40s. If we get a break of 40s, I definitely want to be out at least of the first position. Not interested in taking more, taking any larger risk there. Now I definitely I'll also move my second stop now. I don't like what I see. Definitely don't like what I see. Oh yeah, this is choppy grind. Is not what I like. Got stopped out of the first position right here. Will keep my second stop where it is at the moment, but I will trail it as we move towards the 50s again. With a break through the 50s, I'm going to move the stop to the 40s. Because if we get another move into the 40s like we had here, I'm definitely calling the trade as, the trade idea is invalidated, at least short term, because I'm not interested in taking any more risk. So yeah, now it's clear for me. If we get a break through 40, I'm out, and I'm actually then would be done for the day. Because that is too choppy right here. I mean, you can see at the 5 minute, it's just calling for a break higher here. But, I don't want to take the risk because, I'm trading a small account. I need to, even though if the setup is really valid, I can't give my trade more room than what I'm allowed to risk, with the parameters that I'm trading. And that is why I need to make sure to, get out of a position that I don't feel confident being in. That is really important. Even if you still feel like, oh yeah, it might play out, it will play out. That is not a game here. That's, like, trading is not a game of just feeling. It is, you need to be as rational as possible with how you react to what the market is doing. And that's why I'd call it a day if we get a break through 40 into 39. And then I would be done, even though I definitely like the setup and I think that we will get a move higher into 80, 90, and so on. And also, if we manage to break through 70 right now, I wouldn't be looking to increase because now we're already negative $112 on the day. And yeah, I'm not interested in taking too much risk. If we would be already up like 500 on a day, that would be different. But for now, let me actually close out on the second take profit because now we only have one position. One thing we could theoretically do though is take partial profits. So let's say we take 2 contracts off at the 80s and take the rest of the 3 off into the 90s. So set this back to my 5. It's a grind today, it's a grind. But you get days like this, right? And then you get chopped around. You can see how often I got stopped out here now. And yeah, that's just how the market moves sometimes. And the importance here is that you try to preserve your capital as best as possible on days like this. And stop trading once you have given enough, burned enough energy in the markets. Not only money, but also energy, right? Because it is a lot of energy that I'm burning because it's stressful, right? Being in a position like this. I mean, it's not a lot of risk here. Now we're down $240. It's not a lot, but it's still, just a painful position to be in right here. So let's get out. And let's do a little recap. So, yeah, quite the choppiness here. As you can see, we wanted to take the break of 50 higher into 70 or 80. Failed the first time, took small profit, tried it the second time, and got stopped out again at the 40s, which was good because otherwise it would have moved another 10 points against us. Then we wanted to take a third attempt, and then when it actually broke through the 50s and I saw increase in volume. I added a second position on and also got stopped out of these. And that's why we're down $240 now in a day. But it is what it is. That's part of trading. And yeah. So if you are interested in joining our firm, joining our proprietary trading firm, joining my trading desk, then you can click on the link below, sign up for evaluation, instant funding account, or just a practice account if you first want to get into it. And then, yeah, you can start your career with us at our firm. And yeah, then you will learn a lot more than just from the videos right here. Again, thank you for watching and looking forward to having you in the next session. Hopefully a better one, but it was a good one, right? We managed it well, and that is the most important thing with trading. It isn't with trading. It's not about needing to get a green day every single day, and needing to hit home runs every single day and make a lot of money. With trading, the most important thing really is that you manage everything well. So you manage your trades well. Here we had one trade idea, just didn't work out. We tried it a couple times, didn't work out. So yeah, ending the day red. Good. Then, thank you for watching again. See you in the next episode.